Okay. All right. Thanks a lot for that. So those are some ideas on the technical side. But Dipan Mehta is still with us, so let's get some calls going over there as well. Dipan, I wanted your thoughts on Colgate, because today there is an analyst meet, and this will be the first time that the new CEO, Prabha Narasimhan, will be addressing analysts. So I guess, there'll be some important data points from there. But on the entire consumption piece and on Colgate in particular, your thoughts?
No, Sonia, we're not very positive on Colgate, and it's lacked even some of its MNC peer groups like Nestle and HUL. And that's more to do with the fact that the parent company does not have the kind of repertoire of products which these companies have. So, end of the day, it's a one-trick pony, and it's facing intense competition in the toothpaste business. And overall, also that particular segment in the FMCG space is very, very mature. So, I think every rally in Colgate Palmolive is a good opportunity to exit. There are many loyal shareholders in Colgate Palmolive who are stuck, and the stock has already gone nowhere for the past 7 years or so. So I would say that this is a good time to exit out of the company. The new FMCG or the new consumer plays are in retail, are in QSR, building material, appliances. I think that's where the real consumption growth is going to come through. And FMCG, I think, will just be a tepid 8% type of a volume growth with low double-digit earnings growth, which is not really not really make a lot of money going ahead or so, or any wealth creation for that matter. But I think it will at least retain value if that's the objective of the investor.
Let's just put up the stock price of Jaiprakash Associates. I mean, it's a sort of low value stock, and it's also, of course, involved in this Dalmia deal. Now, implications of what Rakesh Arora told us in terms of there being a question mark whether this deal actually goes through, and so that, of course, if it does not, then this completely changes. But the stock was up 10% yesterday. If it goes through, it's good news because the company gets money. But the fact is that JP's got, it's kind of sort of stuck itself in more than one pickle. The big issue for Jaiprakash is another case, which is in Uttar Pradesh, which is the Yamuna Expressway case. So if you remember, a few years ago, Jaiprakash struck a deal with lenders in which they agreed to pay a large sum of money and, land to lenders. What has basically happened is the Yamuna Expressway Authority has cancelled Jaiprakash's sort of claim on the land itself for non-repayment of dues. That case went to court, and it's kind of stuck in a limbo. I think there was a hearing this week. We'll kind of try and get details on this one. But the point is there is more than one issue here, which one has to take cognizance of before you get all excited about what this could do for Jaiprakash. I mean, the deal going through consummation, of course, does mean money coming in, but there's more than one issue. So 11.75 on JP. Yesterday, of course, was another very large day for mid-caps, Dipan. So just a few names. I don't know if you have any views on any of these. There was Reddington, which was up very sharply. Viatec Vabag, we saw very large moves. The rail names, IRFC, RVNL moved quite a bit. Any thoughts on any of these?
See, I think Viatec Vabag is, finally playing up to its potential. The company has been around for many, many years, and they've had decent order book, good capabilities, but the financials never came through for some reason or the other. Some project would get stuck, some delays, or some other reason or the other. But now I think we are seeing the company really deliver on its potential, and that's very positive. Valuations are reasonable. We are seeing a very decent upswing in the capex cycle, and that's very positive for Viatec Vabag. And water is a key area for state governments as well as central governments all over the world, and this company specializes in water projects, so that's very positive. And I think the railway-related stocks have anyway been doing well, and it's only been a pause, and now again we are seeing the rekindling of interest coming through over there. All of these companies are good in terms of expansion of valuation ratios, and given the earning visibility, we can expect good earnings growth as well over the next 2-3 years or so. So it's a nice, safe, secular, steady investment theme to bet on.
Okay, well, let's do one thing. Let's go to Vivek now. He's standing by to talk about the Momentumizer segment.